Well, hi there, Andrew Bell. Before today's piece from the annual property report, where we're going to have a quick look at finance applications, which are of course a forward indication of what's happening with buyers, I thought you might be interested in the latest National Australia Bank quarterly residential property survey, just released relating to the June quarter of 2015. Now, their chief economist said that the overall sentiment improved in Victoria and remained solid in New South Wales. However, it fell in all other states and quite heavily in South Australia and Western Australia, with both of those states recording their weakest index results since the NAB survey commenced. It also states that the housing price growth over the next year or two was unchanged, with expectations of growth somewhere between 2.1 and 2.3%. However, it did emphasise that the stronger expectations around New South Wales and Victoria actually offset weaker expectations around the other states. Now, the survey also recorded that owner-occupiers, or people upgrading, were also far more active in the last quarter in both brand new built properties and resale markets. Whilst the traditional investors, that is, people who are not first home buyers, were accounting for 1 in 5 sales in both the new and established property markets. The National Australia Bank itself is forecasting average national house price growth will be about 6.1% through the entire year of 2015. It said there will be wide variances in capital cities, and capital growth is expected to lead mainly through the Sydney markets at 10.2%, Melbourne at 6.5%, while gains in a city such as Brisbane will be 4%, and Adelaide at 0.9%. And they're in fact forecasting a drop in a city such as Perth, where they think the drop will be about 3.8%. Now, looking to next year, they're suggesting that house price growth will moderate to around 3%. But interestingly, they expect growth to accelerate in Brisbane, close to us, at about 4.8%. Adelaide will remain pretty much static, with falls in other states such as Perth and so on. And of course, Sydney and Melbourne markets will see lower growth at maybe just somewhere around 3.9, maybe even as modest as 3.1 in Melbourne. They did touch on foreign investment and noted that foreign buyers pulled back a little in the purchasing of new properties in the June quarter, with their share representing just 12.8% of all purchases. They also noted that foreign buyers were more active in the resale market, with their share of purchases up at 8.6%. And of course, to be able to buy in this segment of the market means that these foreign purchasers, well, foreign by birth, most probably are actually now Australian citizens, with the appropriate visas authorising to buy Australian real estate. Now, the colourful map on screen right now will show you the suburbs tipped to enjoy above average capital growth moving forward. There's only 31 in the entire country, and more in Queensland than any other part of Australia, and deservedly so. The Gold Coast is featured as an area to enjoy the above average growth, most deservingly so. Finally, in regards to the housing finance information, we see that the latest release figures, and this relates to May 2015, saw 31.1 billion in housing finance commitments for that month, which was down 4.4% from the previous month of April, which was an all-time record for Australia at $32.6 billion. Looking in more detail, we see the value of owner-occupied housing fell a notable 5.3%, whilst investors and their commitments were down 3.2%. However, lending to investors was at an all-time record, up at 41.9% of the total commitments. But when you exclude refinancing and just look at new lending to investors, they are a massive 52.5% of all lending in the country. We also see that 3.6 billion of the commitments in May were for brand new developments, whilst $21.2 billion were for buying resale properties. So this will be an interesting one to watch moving forward. Has the volume of buyers peaked in April? Are we now seeing a slowdown trend? Now, that has to happen at some time, as the volume of real estate sales can't just keep going to new levels month after month and at the frantic pace that we've seen over the past year or so. This doesn't mean that the market is heading towards any major downturn. It just means that the growth in property values should start to ease as we get a better balance between supply and demand. However, we should keep an eye on whether listings into the market increase, because if buyers drop off a little and if listings increase, then the equilibrium definitely starts to shift. Because we know real estate is an ever-moving market. Well, that's it for this week. All the very best, and I'll see you in a fortnight's time. Bye for now.